Hello and welcome to Stocks Advisor channel. Here at our channel, we are looking for interesting buy opportunities for US-based stocks. Today we will talk about Workday Incorporated, traded at Nasdaq, ticker name wday or wday. So actually, wday today was finishing at 0.22. After hours, we see really nice plus 5.74%. Trading now at 260.79, so means that we are quite high, actually almost to the level of expected nearest target or nearest support resist line, which is here. And this means that tomorrow we might have, if we open that high, we might have actually big red declining candle, and then price might go lower. So with this being said, it's a very important information, because this shoulder that we can see and where we're trading now was considered as a first target of the price, but also as a very strong considerable resist level. Since we're already there after hours, and because MACD wave here is already on the positive top, it means that it might go lower, it might decline, also giving the fact that today a lot of volume was traded. So with this being said, how should we trade here? First of all, we need to remember that here is a very strong confidence interval that we can see, which is between 260 and 219, and actually the way to buy, giving assumption that we might go lower tomorrow, and then especially given it's a Friday, actually last day of the trading week, it means that we should be ready to buy somewhere lower or in the area of free moving averages here. So if we would magnify a little bit, we can see that would be the best level to buy. Therefore, we can already place our levels, and those levels would be here. So it will be between 230 and 240. I will not talk about cents, because the levels are already quite high, so we can talk only about dollars. So 230 and 40 would be the first level to enter, and this would be actually expected rebounds on the decline that we might observe. So it might be like a U-shaped formation and then trying to actually revisit the area of 260. If not, of course, price might continue further, trying to find its next support levels. Also, we don't need to forget that here from April we were growing quite high of previous year actually, so the recovery was going long, and from April this year we were volatiling. So it means there is still a lot of gap below, and if we will have really decline, although it's not expected, we might go really deep down, and then the very first support level would be here. So it will be between the two levels, 199 and actually 187, and this will be our second level where we are going to average down and buy if really the price declines, because if there will be a very strong decline, it can also go low. We know this stock grows well, recovers well, but also its volatilities can be quite hard. Therefore, that would be the second technical level, although a little bit lower, or where we are going to keep our price, actually wait for our price and average down. Why we do those levels and how we do those, you can find in the video, which explains our strategy at our channel, actually how we trade and why we define those three levels. The link you can find below in the description to this video. So please watch it, because then you will understand overall how we trade and why we define those levels. And here the third level, which is usually the risk mitigation level, also called negative catalyst risk mitigation. The third level, which we don't expect from technical point of view, but we still keep some funds to buy there, because if some negative catalyst will kick in, the price could decline rapidly, fastly, and very low. Therefore, we need just to keep some funds to buy at those levels. And for this one, the level would be between 150 and 159, and it is defined actually by price action of October 2019 and by this very famous depth that was taking place in April of 2020. So the COVID depth, here we see quite strong levels formed. So the third level will be again between 150 to 159. So let's write it down here as a call out. And then these are the three levels. So first two technicals, and the last one is a so-called negative catalyst based risk mitigation. So with these three levels being given, actually you can average down. We will talk at the end of this video how to average down and with which levels do it, with which portions. So these are the levels. Now let's talk about the profit. Still, if we return to 260, the next highest level would be after 260. The next level would be here. It's actually top formula 283 almost. Therefore, we can speak about profit taking from 10 to 15% overall from the money allocated in this position. So therefore, let's write the profit taking note. It's 10 to 15%. Let's do it again. So it's 10 to 15% from money allocated in the position. What does it mean? It means that if you buy the first level, the technical, the most expected one, and we bounce upwards, once we have between 10 to 15%, actually 10 plus, it's immediate sell, take the profit, re-enter if needed, but never hesitate to take your profit. Don't wait too long. If you wait too long, position might expire, and actually then you will go to the loss area, especially if you won't be having any funds to average down further. And now let's talk about how we buy through the levels, because we are not talking about any stop loss, but the idea is that we trade wait on the principal levels on daily candles. We wait a little bit if needed, but we buy more at the lower levels in order to make the profit at the rebounds without any stop loss. Therefore, we do it non-linearly. What does it mean? It means that we buy with portions through the levels. Again, in the video explaining our strategy, link you can find in the description to this video, you will see all these details. Please check those, then you will know more about what we do and why we discuss those levels and what do we mean actually. So with this being said, here it's still classical play, so 5 portions, meaning the money we would like to play here you can split in 5 portions. Then you can buy with 1 portion in the first level, with 2 portions to the second level if price goes there, and then you keep remaining 2 portions to buy at the third so-called negative catalyst based decline, the third level. Then while others will be exiting with losses, you will be just buying more. And with this way of trading, although it sounds a little bit contradicting, the worse it gets, the better it is, because then you will be able to buy at the really lower levels. Of course, we don't want to go to the third one, but we keep some funds to buy there as well. And given the fact that it is actually already quite high after hours, we really might have this dark red, so a lot of shorting action might take place, and then it means that we will go to the first, almost probably to the second level by the end of next week. So this would be the way to trade with Workday Incorporated. Overall, quite nice stock if you buy it in time and sell. So good luck with this one. If you like this way of trading and the analysis we do, don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos or new interesting discussions for US-based stocks.